This morning we have partnered with Property Apprentice to talk about interest rates. Are there any signs the property market will slow, particularly after we saw the OCR increase yesterday? The CFO, Debbie Roberts of Property Apprentice, is with us this morning. She's the founder and CEO. Good morning.
Good morning.
So obviously we had the interest rates go up yesterday, but we were expecting that. Do you think it's going to slow the property market?
I think there's a few other things that will slow the property market before interest rates will. So what we saw in the last property boom just before the global financial crisis was that it wasn't until interest rates got significantly higher before the market actually started slowing down. Interest rates are a lot lower now. You know, just before the GFC, interest rates were in double digits. So, you know, we were at 10%. That was horrible. I remember celebrating when interest rates got down to 5.5%, you know, and now 5.5% seems high. So I think it's important to remember, and I've been saying this for years on the AM show, crunch your numbers at around the 6% interest mark to make sure it's still affordable for you if you're looking at buying a property. So the thing that I think is going to slow the market down before interest rates is lending criteria. You know, the banks and non-bank lenders, they're all tightening up their lending criteria at the moment. Part of that is the triple CFA, like I talked about last time I was on. So, yeah, that's all making things a bit tougher for lenders to loan money to people who want to buy houses. So I think we've got a bit of a rush on the market at the moment. You know, people trying to get their foot on the ladder before they feel like they might miss out with rising house prices and increasing interest rates. So, yeah, it's a bit of a combination of different things going on at the moment. But, yeah.
You mentioned 6%. The banks will obviously look to see if you can, you know, service that type of debt. But as the Reserve Bank, you know, tentatively puts the rates up, will all of a sudden they'll look, can you service 6.5? Can you service 7? Will that end go up as well?
Absolutely, yeah, and that's one of the things that the Reserve Bank's looking at doing as well. They're looking at introducing an interest rate floor. So at the moment, the banks are testing your serviceability above 6%. So, you know, just because a bank thinks you can afford it at 6% doesn't mean you necessarily can, though. So you need to double check your budget. But yeah, it's absolutely, as interest rates increase, the banks will increase their servicing rates, and a good chance that the Reserve Bank could raise that minimum standard for them as well.
Debbie, thank you very much for that update this morning. We really appreciate it. That is Property Apprentice CFO and founder Debbie Roberts with us this morning.